Good morning, everyone, and welcome to Healthcare Helpings. This is the first in a series of breakfast seminars that we're going to conduct for the healthcare industry. And today our topic is on detecting and deterring financial fraud in the healthcare workspace. And we're really focusing on more of what you think of as white-collar embezzlement fraud versus billing fraud, which we actually covered in a session we're going to have in a few months. But thank you all for being here today. I hope you had a good breakfast helping, and we're going to start our healthcare helpings. So with that, I'm going to introduce our panel today. First, we have Jessica Scouten, who is a certified public accountant here at Kraft and a certified fraud examiner. And her primary focus is in this exact area in accounting and financial fraud. Next to her is Yvonne Figueroa. He is the CFO of Neighborhood Health Services, which is a federally qualified health center here in Middle Tennessee. They operate about 12 primary care locations throughout Nashville and in the outskirts. Next to Yvonne is Lucy Carter. Lucy is also a certified public accountant here at Kraft, and she leads our healthcare industry practice, focusing on accounting and practice management. So before we kind of get to the panels, I just wanted to talk about a few statistics that are happening in the industry related to fraud. The Association of Certified Fraud Examiners estimates that approximately 5% of annual revenues are lost due to fraud every year. The median loss for a single case of occupational fraud in the United States is approximately $120,000. And these statistics are from 2016. A quarter of those cases, the losses were actually over $1 million. And 35% of these losses occurred in private companies, with 50% of those losses never being recovered. So those are, to me, staggering statistics. So we're going to get a little bit, talk into more detail about that. We're going to focus on some of the red flags that stand out there related to fraud. Then we're going to talk about the profile of someone in an organization that stands out that potentially could be committing fraud. And then fraud schemes, and this is where we'll get into some stories, real-life stories that we see. And then we're going to talk about best practices on deterring fraud. So with that, I'm going to turn it over to Jessica, and she's going to tell us a little bit about the key reasons for fraud and what some of the red flags are.
Thank you, Scott. Good morning. We only have an hour, so I'm just going to go ahead and dive right in. Typically, when fraud occurs, there are three elements that are present. The fraudster needs to have the pressure or the incentive to commit the fraud. They need to be able to rationalize their behavior, and they also have to see the opportunity. And this trifecta is known as the fraud triangle, which you can see on the screen behind me. So let's talk a minute about a pressure and incentive a person has. This usually falls into either the professional pressure or a personal incentive. Personally, if they have a lot of debt, they might need extra money. Or if they have a new car and that they can't make the payments on it, they might commit fraud that way. Also, on the professional side, if you think about if it's a company that has investors, there are certain expectations that need to be met, certain revenue or expenses or profitability. And if the company is not performing like they need to, they might not be able to make those investors' expectations. And then also simply, it could be that they're greedy. You know, by human nature, they see their next door neighbor having the newest, nicest car, newest, nicest house, and they want that too. So that could be a reason why they feel pressure to commit the fraud. The second piece is the rationalization. How do they wrap their mind around stealing from their company, stealing from their business owners? Some people are able to rationalize it because they say they are just simply underpaid. You know, I was passed over for a promotion. I didn't get the bonus that I expected. And so because they're not doing it above the board, I'm just going to take a little extra money and put it in my pocket. Some people also say that they are just borrowing the money. They need to pay their rent at the end of the month, and they're just a little bit shy. And so they're just going to take a little bit of money. And when they get paid next Friday, they're going to put it back. But that never happens, and so it's this snowball effect, which we'll talk in a minute. And they're just borrowing it, but they're never able to repay it. And then another way that people are able to rationalize it is because they want to help their other employees keep their job. This is back to the professional pressure. If shareholder expectations aren't met, they know that they might need to shut down a division and people will need to lose their jobs. Or if they have debt covenants and they're not able to meet those debt covenants, the business might need to wind down. And so they can say, I'm just committing this fraud so that I can help people keep their jobs. And so as business owners, it's really difficult to have any effect on how people think and the pressure and the rationalization. But one way that you can help prevent fraud is the opportunity piece. Because unless the person sees an opportunity, it'll be really hard for them to commit the fraud. And the way that they are able to do it, or the way they see the opportunities, is because there's weak internal controls, that there aren't proper checks and balances in place. And sometimes there were proper checks and balances in place, but the organization has grown significantly or they've had to downsize. And so what was good internal controls over time has morphed into an environment where it's just ripe for fraud. And then what happens sometimes is that they see the opportunity one time and they do it once. And then, no one caught them, so they'll do it again. And I like to call this the snowball effect. It just starts out small and it's just a snowball that just goes down the mountain and gets bigger and bigger and bigger. I want to tell a quick story, which we'll talk about more later. But I worked on an internal investigation a few years ago that it was the typical snowball effect. It was a C-suite executive who was receiving travel advances. So he would be taking trips, and he would get travel advances for the trips, and then ultimately he was supposed to turn in his receipts to offset these travel advances. Well, in 2009, I had to look up the statistics because it was just staggering. In 2009, he got $82,000 in travel advances, and he also turned in there were most receipts to those travel expenses. In 2010, he had $120,000 in travel advances. In 2012, he had $440,000 in travel expenses.
That's a lot of travel.
That's a lot of travel. I first thought he was taking a private jet every place to have that much. Oh, no. He did fly first class, but there were no private jets. And by 2012, very little receipts ever turned in. And then when we called in 2015, he had $874,000 in travel advances and no receipts. And so you can see it's a classic. The travel advances went up, the receipts turned in went down to the tune of about $4 million. So they just start out small, and then they see the opportunity, and they're able to exploit it.
In that scenario, weren't some of the receipts fraudulent as well? Or?
Oh, yeah. We'll talk about that later. Yeah. Yeah. So I like to think about what can you do to detect this, or just have your antennas up. And I call this the 5 deadly D's of fraud. And if you see one of these things, it doesn't necessarily mean that fraud's occurring. But I would say if you see a clustering of these behaviors, that you might be a little bit suspicious. So first, divorce. If you see somebody going through divorce, they have brand new pressures that they never felt before, both financially and just trying to figure out their everyday routine. If they have a drug or alcohol problem, and this really is any kind of addiction, it could be gambling, anything of that nature, that they need extra funds to help support that lifestyle. And maybe not even them, but someone that they know and they care that they want to help. Do they have a lot of debt? Nashville is a booming real estate market right now. Did they buy a house that probably stretched them a little bit too thin? It's something to consider. Are they disgruntled? Are they not happy to be at work? Are they just disgruntled employees? They're upset when you ask them a question. Are they defensive? Do they cross their arms? Do they not want to answer your questions when you ask them very simple things like, why doesn't the balance sheet balance? I had this one time. We were looking at the balance sheet and we're like, this doesn't balance. And I got the typical cross the arms, and they got very defensive. So it's just a red flag that you want to be aware of. We also say, we call this the 5 deadly D's. We also call it they might have a problem with wine, women, and song. And we also sometimes say that they might have a problem with booze, babes, and boats. So there's a lot of different funny ways that you can term this, but just a few things to keep your mind on. And then, so what are some other red flags? Is there a good tone at the top? Does upper management, are they promoting a culture of honesty and integrity? In the case I mentioned about the expense report fraud, the owner said, I don't need to turn in receipts. And so if his employees see that he is sort of lackadaisical with the good internal controls, then that's just going to have a trickle-down effect on the rest of the organization. Are there patient complaints? I had a case recently that this wasn't patient complaints, but it dealt with rebate fraud, and customers were not getting their rebates that they anticipated. And so customers would call in and say, I didn't get my rebate, or I don't think it was the correct amount. And the problem with this organization is that the calls that were being made were being directed to the person who was committing the fraud. And so they were able to say, oh, I'm really sorry, that was a mistake. And they would issue them a check and the rebate problem would go away, or that's a computer glitch. And so, if you have customer complaints, make sure they're being sent to the correct person that would detect if something was amiss. Just skipping down, if you see a behavior that, well, only I can do it. You have Susie who comes in early, works really late, never takes a vacation, is always overstressed. That could be a red flag, because it's a lot easier to commit fraud when you're in early or you're there late and you don't have somebody sitting in the office or cube next to you. And then just what doesn't make sense. If you know that somebody has a brand new car, has taken a lavish vacation, you generally have an idea of how much they make. Are they just living beyond their lifestyle? It's just something that you should probably step back and say, where are they getting all this money to do this?
Now, Jessica mentioned booze, babes, and boats as a typical fraudster, and that's certainly the case. But in reality, up here you'll see some of the points that are the typical fraudster in most cases, and that definitely doesn't necessarily meet that profile. And I want to open it up to the panel and talk a little bit about what you truly see from a fraudster within your organization, or what you've seen.
Well, I'll say for the slide behind us, this is the typical person who will commit embezzlement, who will steal cash or other assets from a business. So it's typically women who have been there more than 10 years, who are about 50 years old, college degree. I'm guessing that some people in the audience today. And the reason it happens because they're trusted. They've been there. It's your sister, it's your cousin, it's your mother, and they would never do anything like that. I'm not sure if anybody else wants to chime in.
We have a situation about 18 months ago, and this was a woman. Her situation was financial stress. She was the front desk person in one of our dental practices, and being a federal qualified health center, we deal with a lot of cash, and dental charges can be quite high, as you can imagine. And she was just taking cash and posting a different payment, different level type of payment in our electronic medical records, and giving a receipt for the amount that she had received to the patient. We do have somebody who goes to the clinic and reconcile the cash against what we posted in the electronic medical record, but he wasn't reconciling the cash against the receipt, the copy of the receipt that went to the patient. And the way we discovered was by patient complaint, actually. And, we were sending a statement to some patients, and they would call and tell us, I paid this. I mean, why are you sending this statement to me? And when we look, and we asked them for a copy of the receipt, and, certainly they had paid, but what they had paid wasn't posted in the electronic medical records. So, and this was a female, and her situation was that she was an immigrant from Mexico, and she was trying to bring her family from Mexico, and this was the only way she could figure out how to do it. It was a sad case, but it's not the right thing to do. So we let it go, and we filed a complaint with the police department, and the police went after her, and she's probably still in jail, I would think.
What was the total amount on that, Yvonne?
About $16,000 in a period of 12 months, roughly.
So while we're on the subject of cash, these are some of the main areas to look out for within with fraud within a healthcare practice, or really any organization. Yvonne mentioned that example on cash. Also accounts payable, accounts receivable, and payroll and employee reimbursement, as Jessica just talked about. Lucy, why don't you dive in a little bit more about cash?
Great. We're going to talk a little bit about cash schemes. And when we talk about cash, we're talking about petty cash, but we're also talking about really any payment that comes into the practice, whether it's in the form of cash, it's in the form of a check from a patient or a payer, or a credit card. And cash in a practice is really a crime of opportunity. And that opportunity is obviously increasing as we become more aggressive in collecting copays and high deductibles at the time of service. So looking at a few of these common fraud schemes, obviously stealing cash on hand, whether that's from a change fund or petty cash, and we'll talk about that in a minute. Voiding patient charges. Oh my, this is a way to cover up stealing the patient payment. So we steal the payment, but it's like Yvonne said, well, what are we going to do? Because we send the patient a statement, they're going to know we took that payment. So I'll just void the charge. So not only is the practice or the entity losing the patient payment, they're also losing the ability to bill the payer for additional reimbursement. Stealing copays, easy. Stealing copays, because copays are usually in an amount that are pretty commonly paid in cash. $20 copay, $20 bill. I've got to go to Walmart on the way home. I'm going to borrow that $20. I'll put it back in the morning. And, you know, like we said, a lot of times the morning comes and goes, and that doesn't happen. And then diverting payments, whether it be checks, and you say, well, how on earth could you divert a check that's made to the practice? Most of these fraudsters are not going to be going into the bank and visiting with the teller. They're going to be putting these deposits, if they're putting them into their personal account, they're going to go into an ATM, and if you're not using a signature stamp that says for deposit only, you know, there's a really good chance that's going to slip through. And credit card payments. We all have on our statements the ability for the patient to write in their credit card information. And if those are laying around the office, that is a perfect opportunity for a fraudster. Stephen High and I were talking about this morning about credit card fraud, and, you know, you have to be careful now going to the gas station and putting your card in and getting it stolen. So just think about leaving this information laying available in your office. So let's look at a few cash controls, some things that we can set up in the office. And we've got a lot of checklists and information in your notebook about things you should look at to set up good controls for cash. And one of the things you're going to see, and we're going to talk about in every section, is segregation of duties. And what that means is that you're separating the cycle of that transaction. So, for example, we don't want to have the person that's collecting the payments posting the payments, because that gives them the ability to take that payment but post it on the patient account. You don't want the person posting payments to post adjustments to patient accounts unless those are contractual adjustments. You want to make sure that you're making deposits daily intact, and that means that there's one deposit made daily. Now, a lot of banks now provide the opportunity for you to scan payments in as they're received. Great control, but we still have checks sometimes that are coming through the mail or over the counter that we have to make deposits for, so we want to make sure that we do that. Quick story on fraud. We had a practice, this has been it's been many years ago, but the office manager was actually taking the deposit to the bank. And the deposit would have cash, and she would borrow the cash out of the deposit and replace it with a personal check. But it got to the point she couldn't do that. So the way she was covering it up was she was trashing the entire deposit. So really bad thing. And talking about, you know, wondering who this person was, one of the physicians said, you know, I was having dreams that I went to her house and how beautiful it was. How did you afford this house and all these nice furnishings? So make sure that they're made daily intact, balanced with what you're receiving over the counter. You have someone else look at it and reconcile it. Maximize the use of EFTs. It's one of the best things that's happened in healthcare. If you've got a payer that offers that, take advantage of it. And use a lockbox. And when I tell people that, they go, "Oh, we don't want to do that. That's too expensive." Well, how expensive is it to have someone open checks, make copies of the checks, prepare the bank deposit, take the deposit to the bank? There's a lot of cost in there. Plus, there is that risk that, the money's not going to get there. With the lockbox, those checks are deposited directly into your account, and the bank makes the copies of the EOBs and the checks for the payment posting.
And just about all banks provide that service.
Yeah, right, absolutely. If you have, I really discourage you from having petty cash on hand. We all have to have a cash fund because you have to make change for patients that bring in cash. But petty cash is pretty dangerous. And if you do, please minimize it and make sure that you get original receipts for reimbursements. Once again, Susie, runs by Walmart on the way home, and I'm so conscientious. I knew we needed toilet paper, so I picked it up while I was at Walmart, and I lost my receipt. So I'm just going to write out a little receipt, and you'll give me a check for that. So make sure you get original receipts. And also very important, because we do want to collect at the time of service. I mean, we want to do that. Make sure that you review periodically the charges for the day against payments recorded for that same period, because you want to make sure that you're getting those copays, you're collecting deductibles. But if there is kind of a history of not getting those payments, that's worth looking at, not only from a revenue standpoint but also from potential fraud situation. And reconcile your deposits with payments posted and what's being posted to your accounts receivable and what you're picking up as revenue.
Lucy, with separation of duties being such an important factor, how does a small practice where they just may have a few employees do that?
Well, you want to do the most you can. And in a small practice, let's say it's a solo physician practice, I mean, that kind of part of that's going to fall on the physician. Part of it one of the things that we do, we represent a lot of small practices, is part of our accounting duties. We'll make sure that the payments that are reported going into the bank equal what's been posted on the system, because if you don't reconcile those two, you can post a payment and the patient account looks great, but it never made it to the bank. And then making sure you've just got those good things in place, that you're using a stamp, you're making deposits every day. Do not let money lay around in your practice. The other argument that we see is that, well, we don't make the deposit until we post the payment. Yeah, I hear groans. Thank you. That is a really bad practice. Well, we don't have time to make copies. Oh, good gosh, do you have time to prosecute somebody taking that money out of your practice? Do you have time not to file secondaries because you're not posting? I mean, there's a whole lot of bad things that happen with that. So, just being smart, setting up a good system, segregating as much as you can, and having oversight.
Great. Thank you, Lucy. Let's switch gears and talk about accounts payable schemes. And Jessica, do you want to start us off on that?
Sure. So some common accounts payable schemes are creating false invoices or really creating false vendors. So when this happens, your bookkeeper might create ABC Supply Company, which is a vendor that doesn't exist, and that vendor happens to have her home address. And so if she has too much control, she'll just write a check to ABC Supply Company, and she'll take that check once it comes to her mailbox at home, and she will deposit it in her bank account. We also see it with altered checks. If a check has been made out to a real vendor, the accounts payable person might turn it over to whoever's going to sign that check, and rather than the person who signed the check putting it in the mail and the AP person can never see it again, he gives it back to her. And so what she'll do is she will just white out that payee line and put her name in it and take it right to the bank. We also see duplicate payments, and this happens when a company will pay the same invoice twice. The first time that it's paid, it'll be paid to the vendor for the services that they rendered. The second time, it'll be paid to that vendor again. But what happens is someone in accounting or sales, whatever department within the company, will be in cahoots with that vendor. And so when that second check gets to that vendor might take a cut, 10% or whatever, and send the rest of the funds onto that employee. So make sure that you have controls in place, that you're not paying those same vendor invoices twice. Wire transfers, this is just a really scary area because once the money has been wired out, it is gone. It is so difficult to get those funds back. And then personal use of credit cards. I'm sure that many of your practices have a business credit card that several people have access to, and they need access to it for some reasons. But make sure that you're reviewing those credit card statements. One that I typically see is Amazon. Everyone who's shopped at Amazon before? I did it last night, yes. And so sometimes you need Amazon to buy business expenses, and it makes perfect sense. But sometimes it's pretty easy just to put another Amazon purchase that you personally need on that credit card. So if you see Amazon, sometimes I just encourage people to look at if they have a business Amazon account, see if you can see what purchases were made during that time period, and that's if the receipts are not behind it. And then you can also see within Amazon where that was shipped to. So if it's not being shipped to your practice, if it's being shipped to someone else's address that you're not aware of, that should be a red flag.
And can I share a story?
Absolutely.
And this is a he, not a she. This was a practice where, you know how American Express will send things to the practice saying, don't you want to add somebody? Don't you want another card? Well, he took advantage of it and bought furniture for his house and all sorts of stuff that was discovered. Here's the problem. He was terminated, but you cannot reduce his wages for what he stole. You have to pay the person for time worked and then prosecute. And that is a very crummy part of the wage and hour law, but you are not allowed, because that was what they were going to do. They owed him a check. We'll just take it out of his final check. Can't do it. So keep that in mind.
May I say something? As the CFO of my company, I don't have signature rights. I cannot sign a check. I cannot sign a wire transfer, anything like that. I don't want it. It's segregation of duties. That's what it's called. And it's only the CEO and the COO, the ones who can sign checks in our company. And personal credit cards, I'm really against that. Anytime I have an employee using his or her personal credit card, I send what they call an nastygram to them and tell them, this is the last time. Next time you're going to face disciplinary action in the company, and you can even be terminated. So personal credit card is a no-no.
And I have another war story that I'll share too. This is not a case that I worked on personally, but it's a tale that just needs to be told because you just need to shake your head. And it relates to a lady named Rita Credwell, and she was the treasurer, the comptroller in a small town in Dixon, Illinois, which that's about the size of Goodlettsville. And it was determined that over 30 years, she committed a fraud of about $54 million. And when they realized, how did she do this? She set up a false entity with a false bank account, and she had control over the cash and the checkbook, and she just wrote checks to this entity and deposited them into the account. And the way that she was caught is because she took an extended vacation. And because she was out for a few weeks, the person who was filling in for her, they got a call from the bank and asking about this bank account, and the person said, I don't know anything about that bank account, and it just sort of started to unravel. And they realized during trial, they did prosecute for $54 million, I hope they would, that during trial that she had a horse addiction, and she was well known nationally for her quarter horses. She also had 3 vacation homes, luxury vehicles, and if somebody had just stepped back and said, she makes about $80,000 a year. How is she affording this lifestyle? It might have been detected a lot earlier. I will sort of say as an aside, if you know somebody that has a horse addiction, that should be a red flag. I didn't put that on the slide. But I've worked on 3 different cases in the past few years that horses have been involved. So just throwing that out there. we'll dive into a few best practices. Sure. One I like is do not take the signed checks back to the accounts payable clerk. It's very easy for her to white out that name and put her name in and take it to the bank. Do not sign blank checks. I think that goes without saying. We don't need to talk about that anymore. Don't sign a blank check, and don't use signature stamps either. A few other controls. Have the bank account reconciled by someone who does not prepare or sign the checks. Have the bank statement go to the unopened to the person who's going to review the reconciliation, because it's easy for the person who might be committing the fraud to get that bank statement in the mail, open it up, change the bank statement, change the names. If there are copies of canceled checks, change all that information. So when the person who receives the bank statement to review it, it might be an already false and altered bank statement. And then compare monthly expenses to budget and investigate any differences. I hope you're all doing budgets and forecasts within your practice. And then compare those budgets to actual. And if something seems amiss, just ask the question, why are we spending so much more on office supplies? And that could be the tip of the iceberg to say, what is ABC Supply Company that doesn't really exist?
Thank you. Now let's jump into accounts receivable schemes. And Lucy, do you want to lead with this?
Yeah, and we've talked about a lot of this when we were talking about cash, and we are actually going to have another healthcare helpings in November, is it?
November.
Where we're really going to talk about billing fraud. So we're not going to touch on that today, but just a couple of things to keep in mind on accounts receivable. False adjustments. Adjustments are the easiest way to cover up payment diversion. If you just adjust that account off the books, it agrees with what the patient thinks it is, and you can pocket that cash. Refunds. Oh my gosh. The bane of medical practices today are refunds. We are very diligent on collecting the deductibles and, trying to make sure we get that on the front end, which is great. I mean, we want to do that because if you wait to the back end, you may not get it, and the cost of collection is going to be high. But what happens is our estimates, a lot of times, most of the time, are not on target. And so we owe a refund either back to the patient or the payer. But that is an area that's ripe for putting a fictitious patient in. And then just inventory theft, looking at DME, drugs. A lot of practices sell stuff now, cosmetics, vitamins, and the problem with stealing that is not only are you losing the cost of that product, but you're also losing the revenue that could be earned from billing for that product. Some controls to keep in place. Make sure that all adjustments are approved if they're not contractual adjustments. Look at reports from month to month of adjustments by adjustment type and investigate any big changes or areas that you don't think make sense. Review the credit balance report. I know we hate to do that, but we basically have 60 days, according to Medicare, to refund from the time that you identify that overpayment. And if you don't, Medicare can consider that to be a false claim. Documentation and approval for refund checks. At the minimum, you should have a copy of the EOB, a screenshot of the account, and a reason for the refund. And the person signing that check should make certain that the check is written to the person that's on that screenshot and that the address that it's being mailed to is the address that's on the screenshot of that patient's account. And as Jessica said, don't give the checks back to the person that wrote them. You should get a nastygram for that. Yvonne will send you a nastygram. And then maintain an inventory of high-dollar supplies and really any supplies in your office. If you're selling stuff, then you ought to keep an inventory and make sure that that inventory is reconciled.
Now, Vaughn, you had a scenario, an AR scenario, when you worked at the Med in Memphis, where it was billing, but not your traditional billing for insurance, but billing the state for some reimbursement that was done fraudulently. Is that right?
Yeah. In this case, it wasn't, the person doing it, it wasn't doing for direct benefits. This person wasn't getting any cash directly from the state, but it was making look the financial statement much better for his own benefits, and this will help will help her for either bonuses or promotion or whatever. But the case was we were billing, or the hospital was billing the state, and the billing was only supposed to be for face-to-face encounters. Well, they were including in this billing not only face-to-face encounter, but also telephone or phone calls or items. One visit was billed as 2 or 3 visits, because instead of doing a face-to-face, they were doing line items. So it would be with a visit, a lab, and another lab, and they will count as 3 visits. So at some point, the state cut it, and the hospital had to send over $300,000 to the state. And again, this person was laid off or let go, and yeah, that was the situation.
Thank you. So now let's look at payroll fraud and other reimbursement schemes.
Sure. So one of the most common ways that payroll fraud is committed is by setting up a ghost employee. And that can really happen 2 ways. The first way is that an employee has been terminated, but that employee will be continued to get paid. However, that paycheck won't go to the terminated employee. It'll go to the payroll clerk's house. The other way that it can happen is by simply setting up an employee that never existed, a truly fake employee, and then that payroll check will go to the payroll person's house. Unauthorized paychecks. This can come in a few forms. They can alter the salary so that they gave themselves a raise that the owner didn't know about. They could, if they're an hourly employee, they could bump up the amount of overtime that they didn't work. And then also, if they decided to just give themselves a straight bonus that wasn't authorized. And then expense report fraud. This is when someone will falsify the expense reports. This can happen when they are submitting for the same expenses several times. They went to Chili's last week and this week and next week, time and time again, and no one's looking to see that's the same Chili's receipt over and over and over again. Or they could not be turning in, the case that I talked about, they could not be turning in their receipts. And I'll talk now a little bit about that. This was the one that they've spent $874,000 in the 1 year that I talked about initially. And we were called in to investigate. And when we looked at the receipts, they had mostly been altered. And they had been altered by probably your second grader. Sarah worked with me on this, so she can definitely agree. And so what had happened is that the executive realized, I need all these receipts. And so he would go and he would make up fictitious receipts. And the way that I say it, like a second grader did it, is because the heading on the receipt would be like this actual receipt from Hilton, we'll say, which would be like Times New Roman font. The body of the receipt would be in like Calibri, like the fonts didn't match at all. If you've traveled, which I'm sure you all have, and you get hotel bills, how often is your hotel bill exactly $500? No, because you have city taxes, you have state taxes, you have all these taxes. So you would never expect a hotel bill to be exactly $500 one line. And that's what he submitted for reimbursement. And then they counted that as a proper receipt against his travel advances.
Weren't there misspellings on these receipts?
There were misspellings. They would take, if there were itemized charges on the receipt, say $100, $50, the total receipt would be $200. Like, it wouldn't even add up to the correct amount. Sometimes they would turn in receipts that his flight would arrive. He would depart before it arrived. So say his flight departed on April 1st and he got in March 31st. How does that happen? It goes on and on. He had one time he turned in a receipt that was a leap year. a date, and it was not actually a leap year that year. So it was a wild ride. Let's just
The
say
moral of the story there is if you're going to falsify your receipts, make sure to be careful and be accurate.
Yes, yes.
Spell check.
And use spell check, yes.
So I guess at some point people get too comfortable committing fraud. That's many times how they get caught.
Oh yes, it's a snowball effect. No one was detecting it, and it just got bigger and bigger and bigger. So what are some controls that you can put in place in that situation? Require the original receipts. It would have been very difficult for him to commit his fraud if the original receipts had been required. Never sign blank payroll checks. This goes back to what we talked about in accounts payable. And then require documentation and approval for new employees. Make sure that you understand who you are hiring. If it's appropriate, do background checks and do them several times. I was interested in your situation that you actually decided to prosecute.
We did, even though it was a relatively small amount, $16,000. It was just mostly because we want to set a precedent to the rest of the employees. We just didn't want to just let go. The insurance company paid $14,000 of the $16,000 because we had a $2,000 deductible. So you think about it, the loss was only $2,000. Our premium went a little bit up the following year. But it was more because we want to set that precedent so employees will know, and they actually in the staff meeting I did mention the case, and I told them exactly what the situation was. I didn't mention the employee's name, but everybody knew who that person was.
Yeah, and that is wonderful tone at the top. That's what I like to hear all day. And it's surprising, too, because most companies, when they realize fraud has occurred, they don't prosecute. And so it's very rare that happens. What are some other good best practices? I would say establish reimbursement policies. You would be surprised how many companies don't have an expense reimbursement policy. So it's really hard to say this is what you're supposed to be doing if you find something wrong is happening because there's not a standard at all. Use pre-printed detail expense reports. In the case that I mentioned, they didn't have detailed expense reports. It was literally a yellow sheet of paper that he would handwrite what his expenses were with the receipts behind it. And then also going back to compare budget to actual and see any variances.
Now we had on here the Death Master file. Sounds a little intense. Why don't you tell us about that, Lucy?
Actually, we've got a couple of things on here. One is the OIG exclusion database, because if you hire someone who is on that database and has been excluded by the OIG, during the period of time of their employment, you are subject to repay any government reimbursement that you receive during that period of time. So it's very important not only to check them on the front end, but maybe they haven't been caught yet or prosecuted. I was on a board of a nonprofit where they hired a CFO through a company, a placement company, and the person had been convicted, not indicted, convicted of embezzlement with her prior employer. So she had to resign when she had to go serve a little time. I don't know what she thought she was going to tell them. I'm going to be on sabbatical for a year, and I can only call you once a week if I have quarters. The Death Master is a file of people that are deceased, and Gina, you have dealt with that, but basically, you don't want to you can pick people that are deceased to set up as fictitious employees. So making sure that you check that also is important.
Thank you. And Jessica, I see on here your last bullet point, I think was mileage. Is that something common, people turning in false mileage for reimbursement?
Yes, we've seen that. And it's also important to make sure that they're using the appropriate mileage rate. The government changes it annually or periodically, and so that make sure that they're using the appropriate rate when they're submitting for reimbursement.
Great. So in talking about best practices, I think you've heard this several times already. Reconcile, reconcile, reconcile. And then separation of duties. I think those are obviously the two key takeaways here, but there's some others on here too if you want to touch on those.
Sure, I can start. Mandatory vacation time. That's how that $54 million fraud was caught in Illinois, because she was required to take 2 weeks of vacation. And sometimes all you need is that break for a customer to call in and to complain, and that's how the whole scheme is unraveled. Review the bank statements. As Lucy was talking about earlier, cash is king. It is the easiest thing to steal. You don't have to take supplies or other things that have to be sold and then converted to cash. Cash is the easiest thing. And so review the bank statements. Look at the copies of the canceled checks. Make sure you understand and know who those vendors are. Establish a whistleblower line or a hotline. That's interesting that your fraud, Yvonne, was because there was a tip. And tips are the number one way that fraud is detected. Years and years and years, it's the number one way that fraud is detected. So if you have it, make sure it's set up that it goes to the appropriate person who will take action for it. Implement a fraud policy. And no, that's just going back to good tone at the top. If you broadcast to your organization, we will not permit fraud. We are a corporation of honesty and integrity. Just saying that to your employees annually could have a drastic effect on how they act in their behavior. And then bond your key employees. You know, they only had a loss of $2,000. Is that what you said?
After the insurance payment, yes.
Yeah, after the insurance paid that. And so bond your key employees, because most times when that money is gone, it's been spent on booze, babes, and boats, and you're not gonna lots of horses, and you're not gonna get it back from the person who committed the fraud. So making sure that they're bonded is really easy and a good safeguard to have in place.
Great.
Yeah, I was gonna say, reconciliation. People, the people who are doing the reconciliation for you will wonder, why does this guy want me to check so many different times, or so many different times and so many different types of receipts? Well, because that's one of the easiest way to cut fraud, and that's how we are now doing in this dental practice. We have a person who pick up the money every day, and this person will reconcile the patient receipt against cash and against the payment posted in our electronic medical record. So reconciliation is key, and the separation of duties, that's so important. That's how we are trying to avoid fraud. And then I was going to add, your external auditors are your friend too. Many people feel like, oh my gosh, external auditors, what are they going to do with us for a whole week? Well, anytime you have an issue or you suspect of something, they are a good resource for you, and you should pick up the phone or send an email. Listen, I'm having this situation here. How you can help?
And one other thing, we've talked a lot about stealing payments, stealing AP checks. And Jessica kind of touched on this, but the fraud of improper financial reporting. And we years ago got a new client, and the administrator had been terminated because he wasn't paying the bills. And he wasn't paying the bills because he wanted to make sure the doctors got paid. He wanted the doctors to be happy. And the doctors were happy until they found out that he hadn't been paying their rent, their payroll taxes, and so it was a very false happiness. So, if you have those incentives where, things are just not going right, we're not collecting as much money as we should, but we want to make sure everything looks good so that we get our bonus and people don't get laid off, then, that's another red flag, because that's a big fraud too.
Thank you. Jessica, you had mentioned a hotline to report tips. According to the Association of Certified Fraud Examiners, apparently 37% of all fraud is detected by tips through the hotline.
Yes. Mm-hmm.
And then I thought it was interesting, too, from this hotline, approximately half, 51%, all come from other employees. So it's other employees noticing something going on and notifying their superiors. And a hotline in place can definitely help, where someone can do that and they can feel anonymous, where they're doing it via email or online.
And I'll say that the hotline, it could be employees, it could be vendors, it could be suppliers, it could be patients. If you make that known to several of the constituencies, then there's several different people who can report something to a hotline.
Great. Thank you. Well, we want to thank everyone for being here today. Please help me thank our panel here. Did a wonderful job. And you have a number of checklists related to these fraud matters in your packets. Feel free to contact anyone on the panel with any further questions. As we mentioned, we do have a few more healthcare helpings coming up in the months to come. We'll have these approximately every other month. Our next one is September 27th on MACRA. That'll be exciting for all of you that are involved in billing and quality reporting and all that good stuff. And then in November on compliance and billing fraud and the False Claims Act. Thank you all very much for coming today.